Good day traders, and welcome you in Forex Bull Trading Academy. In our today's video, I will be looking at the Australian versus the dollar and what we might be expecting in the coming week. Well, maybe this week or maybe next week. And before we get started, I would like to remind you that information in this video is for educational purpose only, should not be considered as a financial advice. And if you guys haven't subscribed to the channel, do that right away, and don't forget to turn on the notification. So let me just add one more indicator, which will be the oscillator, and that will be the relative strength index. Straight away, what we can see is that RCI is forming a bearish divergence. While price is going up, the RCI is going down. So this is the first sign that the trend could be reversing to the downside. However, there is a very strong support, which is a supply demand area located near 0.7338. We see double rejection, triple actually, three bounces of this resistance, then break to the upside, then there was a support and yet again the support. Now obviously, in order to confirm the bearish divergence, we would need the bearish divergence as well as the potential downside move or even a trend reversal. We would need to break below this support. Along with the support, we have the uptrend trend line, the support trend line. And we can see that they're crossing on the 4th, which is in 2 days. What we could expect is a 2 day of consolidation, and then there will be either break to the downside, I think, or break to the upside. Most likely, based on the bearish divergence, it will be break to the downside. Now, another important point is the rejection of the 50 simple moving average. Price remains above the moving average, which also providing the support, especially at this level. And we had it clean rejection once, clean rejection twice. And obviously, we need to break below the moving average to confirm this downtrend. For now, most likely it will remain in the consolidation phase before and if it breaks to the downside. But what we can certainly see is that there is a key support which must be broken. Perhaps after the breakout there will be the pullback towards this area, which might provide opportunity to sellers to short Australian versus the dollar. Now, how far price might be going if there will be a breakout? For this I need to go to the daily time frame to show you that I have applied Fibs to this last upside swing, and we have 4 Fibonacci levels: 23.6, 38.2, 50 and 61.8, and any of them could be acting as the support. We already had the support being rejected, which is 61.8, a couple of times, and this is where we actually shared our bullish forecast on the daily time frame for the Australian dollar. But now it seems that the time for correction has come, and we expect that the price could be moving towards one of the Fibonacci supports yet again before the long-term uptrend continues. So what are these key supports? From what I see, the one and most important support is located at 0.7170, which is confirmed by 2 Fibs, which is 38.2 and 427.2. I have applied it to this upside correction. Besides, we can see that on this correction, AUDUSD rejected 78.6% Fibs cleanly at 0.7392. So this will remain key resistance, maybe spikes above, but as long as we have 4-hour closing prices below, this resistance will remain valid. So the setup is as follows. We need to wait to see that this resistance holds. At the same time, we need to see the breakout, 4-hour break and close below this support. In this scenario, the bearish divergence should be confirmed, and we then can expect the correction to start. So while we have one key support level which corresponds to the previous area of resistance, we can see there was double resistance, yet again resistance, then support. Clearly a strong supply demand area, and this is the reason why this is the most important one. But the closest one is at 23.6, which is 0.7262 level, also where we saw previously price bounced once and twice. This is the major resistance, but price could be heading even lower towards the 50 or even 61 levels, but this will most likely confirm a longer term decline and will be a consolidation phase, because price is likely to be stuck between this support and these resistance areas for the time being. So what we expect, if it still will be an uptrend, a correction, not more than 38.2% Fips, which also corresponds to 50 simple moving average. If we extend it further, there could be spikes and price could be reaching. But all in all, this is clearly a strong supply demand area, and this is the key support for the Australian versus the dollar. So that's it on this currency pair, but we will now look at the daily time frame and what we expect. So remember this level 71.70, this is the key support. Now let's move to our previous analysis that we had, and here we expect this corrective move to the downside. Long-term bullish forecast was made when the price was at this bottom. So now 71.70 is approximately this support area. I will remove this, and what we have is the support area that we will expect for this currency pair. So we might see the decline such as this before the uptrend continues. This price could be a huge interest for buyers as long as it holds. So the daily forecast remains bullish, but this correction I do expect. Australian and Japanese yen, what we had, guys, this is clearly was our resistance, but what we see on the daily time frame, only a spike produced. So this does not invalidate the bearish forecast, it's just a spike that has occurred. Now daily close above will certainly confirm new higher highs and higher lows, and only then we can expect price to continue trending up. But for now, on the daily time frame, it still is bearish. Moving on to the dollar yen. For the dollar yen, we had broken above this previously made high on the daily time frame. Guys, this is a still spike. I mean, we need to have a daily close above this level to invalidate the bearish forecast, but for now it still is bearish because of the daily close is still not above. Even it failed on the daily to break above the channel, it failed to break above the previously made high. So this is still a valid forecast, and I do think price will be moving towards the support at 103.36, maybe lower towards 103.00. So these are the two support levels to watch. It looks pretty bearish to me because this consolidation phase of 7 trading days could be ending very soon. Now time to go to the pound pairs. We have multiple of them. Pound Australian dollar, nothing has changed. It still looks extremely bullish to me. This correction down, well, it could be providing some opportunities. Let's just put the fibs on from this bottom to the top. So here we have 61.8% could be acting as the support for this currency pair. If I go to 1 hour chart, this area is where the moving average has been broken. So this is clearly yet again a support area for the pound Australian dollar. And I think somewhere from this point, price should be starting to rise, because as long as we hold this bottom, this double bottom formation, it will remain bullish. Moving on to the pound dollar, yet correction followed. Back to this support, massive support, guys. I could expect more, even further decline, but as I said, this is a long-term view, and we might be seeing more consolidation, more pullbacks, but it hasn't changed. I do expect the continuation of the trend up. Next one is the euro versus the pound. Well, this one definitely went too much up. It went ballistic after this clean bounce of the moving average. So back to the daily time frame, I wonder whether the price will manage to close below this previously made high at 0.9007. If it will manage, then it could be a substantial price decline. But let's see if it will manage that or not, because it's very unlikely that there will be this huge spike. But we will see. We need to see the daily close. For now, it seems like it will be invalidated, but I want to see the daily close. Pound Swiss franc. So here's the same. We need to see where will be the daily close. Maybe we will test this trend line yet again. maybe we will test the moving average and then go up. So this could be the case for the pound Swiss franc, yet I still expect the move to the upside. So I think it will be something like that. And the final one is the pound New Zealand dollar. Well, we did hold the support. Previously made low hasn't been broken. There was a spike on the 1 hour chart, then we still don't have a close below the previously made spike, which we need to see in order to confirm the downtrend. Still, I do expect an uptrend as long as this support holds. We might be spiking even lower, but it's important that we stay on the hourly candle above this low, which is 1.8868. But all in all, the confirmation of the uptrend should be break above this resistance. Up until then, it could consolidate still between this support and resistance. This is it for today. Hope you enjoyed the Australian versus the dollar. If you did, smash that like button and don't forget to subscribe to our channel and turn on the notification not to miss the videos that we do every single day on market analysis, educational videos, as well as live trade examples. Thank you all for watching. Until tomorrow.